Foreigners who broke the rules to buy up Sydney property have been caught and punished. Treasurer Scott Morrison has ordered 19 of them to sell up, issuing a warning to all foreign investors. We are watching.
The message we're sending is simply this: that foreign investment in Australia occurs on Australia's terms.
Effectively, what the government has said is if you buy into a property you shouldn't have and you make a profit, we're going to take that profit back from you.
Paul, tell us about this latest round of sales and why these properties are actually illegal.
Yeah, 16 properties, as you mentioned, Rish, with a combined value of $14 million. So between them, they were valued between $200,000 and $2 million each. The buyers were from the United Kingdom, Malaysia, China, and Canada. But the reason this has become an issue, it all cropped up during the height of the boom a few years ago, when it was noted that the Foreign Investment Review Board had brought a prosecution over an illegally bought property for something like 8 years. So the rules are these: foreign buyers are free to buy into new property developments, and that's intended to spur construction. But to buy existing properties, they do need approval from the Foreign Investment Review Board. But as I mentioned, there hadn't been a prosecution for many, many years. But since 2013, there have now been 46 sales in this crackdown, with a total value of $92 million, including most notably a very large property on Sydney's waterfront, which alone was worth $39 million, Rish.
Okay.
It has views straight from a postcard. That's why 2 apartments in this block sold for more than $1 million each. But the great Australian dream for their Canadian owners just went bust.
Okay, the thing is, it seems like they're getting more forceful about this, and we'd like to therefore see more of this happening in the future.
Yeah, there are a number of investigations underway. 2,200 cases have been referred to the tax office, which is now overseeing all of this, and there's 400 cases under active investigation right now. But besides the forced sales, there's some pretty stiff penalties as well. Individuals who break the rules can face fines of $135,000 and or 3 years in prison. Companies have a fine of $675,000 as a maximum, as well as a forfeiture of any capital gains should those properties be sold before the tax department finds out about them. But as I mentioned, we all know the property market in Australia has been very, very hot. So cracking down on foreign buyers like this is, well, it's very politically popular for the government, Rish.
16 properties across the country, ranging from $200,000 to $2 million, will have to be sold within a year.
Our message is we're watching all of them, and we've tasked the tax office to follow through.
The properties, 1 in Queensland, 5 in New South Wales, 9 in Victoria and 1 in WA, were bought by 7 Chinese investors, 4 from the UK, others in PNG, Malaysia and Canada.
The Asians, particularly the Chinese, essentially just want a land bank. In other words, they just want to get some of their assets out of China. So what you do in the rules makes not a lot of difference.
The rules have been beefed up. There's now fines of up to $135,000, up to 3 years in jail, as well as the sale of the properties without any gain. The tighter rules mean for properties like this one, bought in 2010 for $1.6 million, but now worth almost $3 million. Its British investor could be stripped of that entire profit.